Bell rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno-monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Hello, I'm Professor Code at the Forex Super Model, and this video is how we made 350 plus pips points using the Forex Super Model in 24 hours. So what we're going to do is we're going to run you through a recent scenario which we think is going to be very useful to you in the future, and it's basically revolves around a long trade on the GBP USD. I'll just grab a cloth here and we'll make a start. So basically away we go. Let's talk about this setup then. So right, so the setup. Right, and so you can go back to your charts and what have you and look it up for yourselves. We're talking about Tuesday the 12th of the 1st 2021. Right, and we're talking about a long GBP USD trade. And if you look at the daily for that period, you'll see that it opened at 1.35182. The high was 1.36704. The low was 1.35046, and the close was 1.36637. So obviously there may be slight variations depending on what charting package etc you've got, what broker etc, but that's pretty much in the ballpark. So the GBP USD, it opened at that, the high, the low, the close. So and so during that period, the high to low, which was the range, which basically was the difference between these two, was 166 points or pips. And the open to close was plus 145 points. So that's what we were dealing with, that particular 24-hour slot, with a high to low of 166 points. It pretty much steamed up all day effectively. The open to close was 145 points. So the setup we'll discuss now. So that's the background, if you like. So our daily briefing in the Forex model is obviously relevant, and you can look up what we said there, but I'll run you through it. But so what we needed to get a situation in our favour like that, what we need is three things in terms of FX complex flows. We need like a target day. So we need a target day, which in this case was the Tuesday 12th of the 1st. We need an N-1, which is the day before, so that's the previous day, which was Monday the 11th of the 1st, and we need an inch a week flow, which was from, because we're dealing on the Tuesday, it was from the Monday the 11th of the 1st open onwards. So we've got three flows to look at, and in which to get ourselves into a position where we can take advantage of this situation. So before we look at the flows, we need to as you know, if you look at the daily briefings, we tell you what's going to knock these positions around, and we've often said that when there's a light data day on the economic calendar, that these are quite often excellent opportunities for traders. And so it transpired for us, because we were able to recognize positional complex flows and take advantage of this light data day. So let's just have a look at what we were talking about in terms of data. So remember, where our target day is the Tuesday. So the Tuesday, which is the 12th. So if we look at the econ calendar, now if you look at the economic calendar, the initial thing to notice was there was a GBP speech basically at the Bank of England, and by a chap called Broadbent, and this was a tier 2 event. And then later you had 2 times US Fed speeches. You had Brainard and Rosengren, Green, or whatever it was. Apologies for getting the name wrong. Rosengren, Green, however you say it. Right. So you've got US and you've got GBP, and these are tier 2 events as well. Now, these can be dangerous, these speeches. All right. So why were we able to effectively ignore or at least phase them into our analysis? Well, funnily enough, the day before, the Monday, so this was Monday, so this is our n minus 1, which is the 11th of the 1st. We had the BOE, Bank of England, governor, who basically is, you know, in charge of the Bank of England, and that's Bailey, and that was a tier 1 speech. So on the Monday, which was our n-1 situation, we had a tier 1 governor of the Bank of England speech, which highlighted certain events which we were able to factor in. And the following day you had a tier 2 speech by a chap called Broadbent, and he wasn't going to steal the thunder, as it were. So it was calculated that on the Monday the bulk of the information, 90% plus of market moving information, will have come out via the governor's speech, and then we've got the sweeping up on slightly different subject matters by Broadbent, and the Fed. These were tier 2 speeches as well. So, and if you look at the economic calendar for the 11th and particularly for the 12th, which was the target day, you can see that there's very little else going on, and that's how we like it for these setups. So there's very little to knock the knock our trades around, apart from the positioning and the flows, which is what we're going to come on to now. So our target day then. Our target day. Let's start with the flows here. So target day, the day we're actually going to trade was Tuesday, the 12th of the 1st, and these were, so I'm bearing in mind we're up early. We're seeing the effects of the Asian market, which is coming to a close by the time that we're doing this analysis. So this is intraday Tuesday the 11th of the 1st. So it's from the open to basically near the end of the the Asian session. So, and these were the flows then. So the intraday, which was as follows: we had euro, yen, dollar, and then we had the pound on the positive on its own. So, and this was plus 27 for the pound. The dollar was -1. The yen was -9, and the euro was -17. And this was an activity of plus or minus 27. So we've got a positive unopposed driver in the pound, a negative rock in the dollar, a negative mover in the yen, and a negative secondary driver in the euro. Now that is the information that we had sort of about, I don't know, 5 o'clock in the morning on the Tuesday morning, which was our target day, which was Tuesday the 12th here. It's not the 11th. Monday was the 11th. So it was Tuesday the 12th. So that was the information. They were our most recent flows, and we had the pound positively driving, and it was unopposed. So we had no backdoor flows. So what that was basically telling us was one of two things: either it was a top in the pound, a short-term top, or it was the start of a ramp up. Now we'll talk about that in a minute. Now we're going to look at the N-1 flows, which are the day before. So this is Monday, the 11th of the 1st. So, and what have we got here? The N-1 flows then are euro, pound, yen, with the dollar here. Right, so we've got plus 179, minus 12 on the yen, minus 41 on the pound, and minus 126 on the euro. Okay, so we've got a positive unopposed driver in the dollar, a negative rock in the yen, a negative mover in the pound, and a negative secondary driver in the euro. And that was on activity of plus or minus 179. So this is the N-1 flows. In this case it's the Monday the 11th. So that's the flows for the whole day of the Monday, which was the day before we wanted to have a go. So what we've got here is we've got no backdoor flows again, but we've got massive dollar strength, euro weakness, and we've got the pound acting as the negative mover. Now the final part of the equation is the intra-week. So intra-week. Right, so the intra-week then are as follows. We've got euro, yen, pound, and then we've got dollar again on the positive on its own. So we've got intra-week, we've got plus 158 for the dollar, minus 11 for the pound, minus 24 for the yen, and minus 123 for the euro. And that's an activity of plus or minus 158. So we've got a positive driver unopposed in the dollar, we've got a negative rock in the pound, a negative mover in the yen, and a negative secondary driver in the euro. Right, so that's our flows then. So that was the setup. We've got our target day, which was the Tuesday. We've got the intraday flows, which are the most up-to-date flows. They're the early morning flows. They're telling us basically what the Asian session has been doing and how it might set up coming into the European and North American session. We've then got N-1 complex flows, which is the day before. That was the Monday. And we've got intra-week, which is basically from the beginning of the week. So it's Monday opening to pretty much the same point as the intraday flows. So let's talk about those then. So if we look at the N-1, the Monday flows, and the intra-week, we've got a similar situation here. We've got the dollar, which is the unopposed positive driver in both cases. And as we know, there's no backdoor flows, so the dollar was highly in demand the day before and so far this week. Now, that can tell us one or two things, as you know. It can either tell us that it's a near-term top for the dollar, or it's the start of a dollar ramp-up. Now, we'd actually had quite a considerable move up in the dollar, and so we were fairly confident that this situation represented a top in the dollar. So that's the way we were thinking there. So this basically highlighted a top in the dollar, which was one part of the equation for our pound dollar long, and the intra-day flows, which were the most recent, was showing the pound as in play. So the pound was in play at plus 27. So over the Asian session, everybody was starting to maneuver for a positive pound. Now, so in this case then, we decided that this was the start of a ramp up in the pound rather than a near-term top. So you had this ideal situation where when you've got the pound dollar, you've got a near-term top in the dollar, so you're likely to see that happening, and you've got a start of a ramp up in the pound via the most recent flows. So and if you look at the Tuesday results, so I'm going to have to rub this off, so that's where we are there. So if you look at what actually happened on the Tuesday, which was our target day, so we were trading along throughout the Tuesday, then we'll just write this up. So this was Tuesday, the 12th, which was our target. Right, so what do we have? We had dollar, yen, euro, and we had the pound here. So the pound was plus 286. The euro was minus 4, the yen was minus 30, and the dollar was minus 252. And that was on activity of plus or minus 286. So you got positive unopposed driver in the pound, a negative rock in the euro, a negative mover in the yen and a negative secondary driver in the dollar. Right, and that was what generated the pound dollar move of plus 145 points, which we talked about at the very beginning of the video. So it moved about 150 points, and the high to low, the range was 166, and we actually scaled in on 3 trades, and our net position once we'd closed them was over 350 points up. Now that's just to show you what we actually did, but just to discuss this a little bit then. So that is the ultimate, that is what we're aiming for when we're having a go at something. We're aiming at if we're long say the pound dollar, we're aiming for the pound to end up as the unopposed positive driver and the dollar to end up as the negative secondary driver. That way you get the maximum bang for your bucks, and as it happened we did, and excuse me, so that is like a perfect scenario for the Forex Super Model, if you like. Now just to summarize then, what are the components you need to recognize to actually do this again? Well, the first thing you need to do is you need to assess the economic calendar, and you need to see where are the gaps. Now we did a video on secrets or behind the economic calendar, if you want to look that up, but there's a lot of information that can be gleaned from the economic calendar as to how the markets are going to react in terms of the data frequency and concentration. So that's what we're looking. So the first thing to do is to identify a potential hole in the economic calendar, and that's what we identified. Then you need to match that up with a suitable complex flows, and then you need to go. And you need 3 elements to the complex flows. You need the target flows, which is the intraday, the early morning flows in our case from the Asian session. Then you need the N-1 flows, which is the day before, so you can see how the market has been setting up, running into it. And then you need the weekly intra-week flows, which give you the slightly larger picture to see where the elbow room is for manoeuvring. Now, had the target day not been a Tuesday, say it had been a Wednesday or Thursday, we'd have had more information in terms of intra-week flows, and that would have been in some ways more beneficial. But Mondays quite often are a light day to day, but not always. So that's the first. So the first thing you need to do is you need to find a gap in the economic calendar. Then you need to match it with the modelled flows in terms of target flows, the day you're going to have a go, N-1 the day before flows, and intra-week flows. And then you obviously need to phase your trades in so that you maximize the situation, and then you need to decide how far you're going to ride this trade up. Now we rode it right the way through the following night, and took it out pretty much in the following Asian session, because the flows were such here. This was the Tuesday flows, which generated our profits, if you like. Had the pound not been the unopposed positive driver, we would have stayed in the trade. If it had been the opposed positive driver, we would have stayed in, because in our opinion it would have had further to go. But because it ended up at this extreme, then you're back to this argument of, if you get an unopposed positive driver, it's likely to be either a short-term top or the beginning of a ramp up. Now we just had the ramp up, so we believed it was more likely to be a short-term top again, and so it actually appeared. If you look at the if you look at the pound dollar running past that Wednesday the 13th, Thursday the 14th, you'll see that the pound dollar pretty much topped out. It went up slightly more, but not much. So it was the right decision there. So that's where we're at really, and so you can benefit from these situations, and you can trade with far more confidence in greater scale if you can recognize these setups and attributes which all come together to generate very good profits, which you can then book and increase your account size. So hope that was useful. Thank you very much.